Thank you for joining me. I'm Alex, and I want to talk about one stock that I'm buying right now, which is Walmart. And disclaimer, the reason I'm buying Walmart is that I work for Walmart and there's a stock purchase plan, so it comes directly out of my paycheck. And I guess that's amazing. I don't know. I don't actually have that much Walmart stock since I sold it all about a year ago and bought Tesla, but that's a different story for a different day. So what they do is Walmart, they're literally the Walmart of retail. Current price is $119, which gives them a market cap of $339 billion. Dividend yield is 1.8% currently, with a 42% payout ratio, which is amazing. The dividend yield is slightly lower than, it used to be because the price has gone up quite a bit over the past year. And the first time I worked for Walmart, or the first day I worked for Walmart, the stock was at like $56, and that was almost 5 years ago. Wow, it's been a while. Anyway, so payout ratio is pretty amazing. Dividend yield 1.8% is not great, but also not terrible, and obviously is going to go up probably every year from here on out, especially if they can keep the payout ratio this low. Revenue $524 billion, which makes them the biggest company by revenue in the world. Earnings $14.8 billion, which is up 123%, but last year they had a lot of one-time expenses that brought down the earnings quite a bit. That is more in line with the previous years when it was like $13 billion. So it's an improvement. It's a significant improvement, but it's not 100% improvement. That is just probably this year. I would expect that to grow further, but probably at a low double-digit rate. Current PE is 24, which is pretty decent. Forward PE is 22, which is also pretty decent. It's just pretty decent for a stock that is this safe. If there was any chance of you losing your investment, the PE of 24 would be pretty high, but compared to most other companies in the S&P 500 or NASDAQ right now, PE of 24 is actually not terrible. Total assets, $236 billion. Total liabilities, $155 billion, which gives them a total stockholders' equity of $81.5 billion. And I have to put the disclaimer that the liabilities are not from their investor relations because they don't list total assets. They just list current assets, and I had to add a bunch of shit together. So there's that. To summarize the whole thing, as I said, it's a very safe company. It's still growing, and there is obviously no bigger company by revenue anyway in the world, so they're probably going to be around for the foreseeable future. Amazon obviously still hasn't really put a dent into Walmart, and that is why the stock is this high. Years ago, there was this concern that Amazon would disrupt retail and basically kill all retailers, and they haven't managed to even make Walmart's revenue shrink at any point. And so that threat was pretty much blown out of proportion, which is why you could get Walmart stock that cheap for quite a while. And with a principle that is this safe, I wouldn't really be concerned about putting a majority of my portfolio into Walmart. I just don't think that that's the best strategy for growth right now. But if you wanted a really safe dividend stock, I think this would be it. Obviously, you could also go with big banks, but their payout ratio is generally slightly lower. Their dividend yield slightly higher, but they don't have the same growth rate of the dividend. They don't have the same revenue and earnings growth rate that Walmart has. Revenue maybe. Anyway, so very safe stock, decent dividend, good payout ratio, nice balance sheet, decent PE. And so for a value investor, I think this would probably still be a buy, even though Benjamin Graham wouldn't even look at the stock because the PE is over 20. But I think that it's a good buy for a value investor. I think it's also a decent buy for a dividend investor if you wanted to diversify your portfolio and maybe balance out some speculative investments or some extremely high dividend yields with a very safe stock where you can be sure that you're not losing your money. For a growth investor, I think that you will not find Walmart growing revenues at least in the double digits ever, because they're already at $500 billion, and I don't really see how much they can go up from here. So I'm expecting them to stay maybe above inflation if things go well, but not necessarily too much more than that. They're not really trying to expand too much more in the US anyway. They're not building supercenters everywhere right now, but there is expansion going on into China and India, and they have the Mexico business going on, and so there is much going on worldwide that is not necessarily going on in the US. So there will still be significant growth, but significant for a company that has this much revenue is not really going to be over double digits. If they can even get to 10% ever, that would be quite significant. Anyway, that's it for me for today. If you like this video, make sure to subscribe. I'm coming out with more videos every day before market open. I hope you have a successful day.